Alrighty guys, what is going up? Welcome back to the Best Investing Money Management channel on YouTube. In today's video, we are going to be talking about what on earth is going on with Peloton stock. So I hope you guys enjoy it. If you guys get anything in value out of this video, make sure you guys hit that like button, subscribe to the channel. If you have any questions, concerns, make sure you guys ask them down in the comments. So starting off, what's going on with it? Okay, so we all know Peloton over the past couple of years has seen really extreme growth. And during all of the lockdowns, Peloton was one of the top performing stocks just because all the gyms were shut down. A lot of people wanted to do at-home workouts, and there was an overall just a ton of demand for the stock, right? It IPO'd around, this $30 mark, consolidated for a while. During the lockdown, the stock fell all the way down to about $17. And once people realized, oh my gosh, this company's going to make a ton of money, it's seen a great amount of growth. The stock went from like $17 all the way up to, highs here at $171 in literally less than a year. And anytime a stock goes up that much that quick, we always have tendencies to see a stock become overvalued and start selling off, especially when it's more of a short-term fad, really, where the stock experienced or the company experienced a ton of demand, and during that time, they were making a great amount of money. You can see these great earnings reports, and then it slowly started to stair-step down back to levels that it was previously trading at. So then it started stair-stepping, and it went from like 171 down to, this $80 mark. It did consolidate there for a couple of months. Just hit some resistance at like 127, found some support near $80, and it just did a great job. There were some, great opportunities for some swing trades. Then it released earnings. Now, earnings is pretty much when a company comes out and goes, hey man, all right, already investors, this is the stuff we pretty much slacked on. Now, during this time, they announced some news. The stock got hammered. And if we actually draw it out, you can see went from like $93 all the way down to $55 in the matter of 1 week. Now, that is a return of negative 60%. So if you were holding Peloton stock, instantly, you'd have been down minus 60% in value. And just to put things in context on how much that money that is over the past 90 years, the S&P 500 has an annual return rate of 9.8%. So we can just call it 10%. So pretty much this is like wiping out 6 years of profits just in the matter of a week. Now, the important thing, anytime you invest or trade, it's always important to cut your losses. And that's kind of what we saw, right? The stock hit this $50 mark and continued to sell off another 45%. So in the matter of, a couple of weeks, we saw a crazy sell-off of just at about 75%, which is nuts, right? That is a crazy amount of sell-off. And just recently, we had a little pop in buying pressure, 25%. Now, why did it do that? Well, we can look at a couple of things here. Right now, we're looking at the earnings. So you can see the only thing good that they have really is this year-over-year revenue. And it could be piggybacking off of, over the past couple of quarters. But realistically, with the stock going up over 100% in value, a 6.2% revenue return is terrible. To put things into context, you want something that's like 20 or 30% growing on the revenue side. So given it's only 6%, I can see why all these other numbers are terrible, right? So the net income was down 642%, diluted EPS, one of the most important things, the net profit margin is negative 46%. So what this means is for every $100 Peloton brings in, they actually lose about $46, which, hey, I understand growth stocks, it's not uncommon to see these companies not become profitable for a couple of years. But the thing that concerns me is the demand. Right now, there's virtually no demand from this stock, from any of these things. So if we actually look at this article here, you can see Peloton right now is eliminating 2,800 jobs. Scaling back on marketing, well, because there's no demand, because people are now able to go to the gyms, in my personal opinion. And realistically, these things are crazy expensive. These are like over $2,000 that could pay for your $10 a month gym membership for years, and this is just one machine that the only benefit is it's at home and you have classes that sometimes you have to pay monthly for. The cool thing is it's a great product. It's a lot of their instructors are very engaging, and honestly, it's a very cool thing. But overall, right now, I definitely think that Peloton is way too risky to buy. If you are a beginner just starting investing, Peloton is not going to be the stock for you. Even if you are a experienced investor and you understand Peloton carries potential, yes, but you have to do it with the mindset of, okay, this thing could easily go to zero like that, right? The demand is not there. It shut all production. It shut all production down. It is pretty much scaling back on marketing, which means no demand. Crazy. It's just a terrible thing. Very, very bad revenue. I would not recommend this at all. I am not even recommending, putting it in your portfolio. That's how bad it is. Normally what I'll do is put like 1% of my portfolio into something like this, but given there's way too much speculation, this thing could easily fall down to $12 or it could pop back up with a couple of good earnings. The best thing for this company would be to get bought out, honestly. That is it, guys. I hope you guys enjoyed it. That is my honest opinion of kind of what's going on and my honest opinion of Peloton stock. So I hope you guys enjoyed it. If you did, hit that like button, subscribe. We will see you guys later. Remember to stay happy, stay positive, stay safe. Take care.